Trading is all about relationships. We're talking about your relationship to money. It makes you emotional. There's at least 3 things you must have to have the perfect strat. You don't try to make money by predicting the market. You're not trying to get the top tick or the bottom tick. It would help if you knew that using a crystal ball, but you probably don't have one. Nothing's perfect, especially in the stock market. There is always a risk all the time. So the real world experience is the only thing that is really going to solidify making the better trader. Hey guys, welcome back to the After Hours. I'm the HL Beast, and today we're going to talk about your market career path. Now, when we look at the market, you have to understand that it doesn't matter if we're talking about stocks, currencies, commodities, or even something digital. It all comes down to supply and demand. The lower the supply, the more the demand. There's also another aspect to that, and that's usually catalysts. If there is news coming in that the company is gonna get 10 times better, or the management is gonna be 5 times better, or this certain war over here blew up our main resource, that's gonna affect the stock price. And as a trader, you are the person that's gonna be responsible for what happens inside of your account. If you are trading that specific stock, you're gonna have a specific rule that says what to do, because that's what trading is. You investigate every day, or you investigate enough in the front side of your training, and then you apply that throughout the year. We're looking at everything in terms of performance, in terms of the year. And when you're looking at a specific company, you're looking at their performance in terms of supply and demand. And if you see imbalances inside of the supply, which is the quantities, or the demand, which is the flow of money, you are going to find an opportunity. Usually, you want to put your personal risk management on it. We're talking about risk management where you limit your downside so you can capitalize on the upside. Remember, if you can create risk management that keeps the upside while managing the downside, it's going to be the perfect situation for you. And in theory, nothing's perfect, especially in the stock market. There is always a risk all the time. So the real world experience is the only thing that is really going to solidify making the better trader. Now, when we talk about the perfect trader, we're talking about the person that has an open mind. They understand the ins and outs of what makes this an opportunity, where the money actually comes from, where the imbalance is inside of the trade. And the reason they know this is because they have a pattern they follow. And with this pattern, they have plans of strategies and risk managements around the edge. We're talking about there's at least 3 things you must have to have the perfect strat. You must have balanced risks where you keep the upside, but you manage the downside. You don't try to make money by predicting the market. You're not trying to get the top tick or the bottom tick. It would help if you knew that using a crystal ball, but you probably don't have one. So the next best thing is to know how to react appropriately to each piece of information at every point in time. Because remember, in a pattern, you are creating a structure. You saw opportunity because you have a list of criteria and signals that are going to show up based off of basic filters. And these basic filters set up your edge.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
When we talk about a pattern, we understand that things have happened in the history, and you're gonna have to back test this pattern to even make sure it's valid. You're gonna see something similar in the future. And with each one of those similar things in the past, you're gonna see different variations. Sometimes it only shows up halfway, and then all hell breaks loose. Sometimes it only shows up 1/4 of the way, and then it becomes completely different. Well, there's usually some piece of evidence that tells you this could have been predicted. Instead of predicting the top and the bottom of the chart, it's better to predict what variation are you going to see. And at each point inside of that one pattern, you can make your own trade. We're talking about if you're looking at a topping pattern and you see this trade is going to have 3 points where it tops. Well, at any one of those points, you could probably say it's ranging. And so you can create an entry only at the tip of that range, where you think that range is going to peak. Yeah, that sounds like you're guessing the top. Remember, your opportunity is in the topping pattern. It's not in you trying to guess the top of the stock. At any point in the day, that high can be broken and you don't know when it's coming back. But what you can do is, instead of waiting for the first peak or even the second peak, you can wait for that third peak. And at that point, you have 2 more peaks that give you a heavier idea that there might be people trying to hold that level. And what you're gonna do is you're gonna have a very tight risk management. Those previous peaks are going to hold because you're aiming for the topping pattern. That topping pattern could be a lower high. It could be a triple top, a double top. The reason you enter this trade is not just because of that topping pattern. It's because your edge overall. Now, which brings me to my last point. Know when not to have an opinion. You can have similar trades to other people. You can even match opportunities with other people. Trade the same stuff, but you cannot follow someone tit for tat. At some point, you're gonna have to own your own trades. That's the only way to grow as a trader. If you don't create your own risk management using someone else's foundation, which is fine, you're ultimately not gonna have confidence. What happens is trading is all about relationships. We're talking about your relationship to money. It makes you emotional. Your relationship to trading as a career, your spirit as a trader. You are a disciple. You are disciplined to the idea of following a plan. And that plan is gonna give you money. Now, the plan you can't have is to follow someone else. The plan is something that you have to create and fine tune throughout your entire career. And that is gonna be based off of what the market is offering. But to be able to understand that, you don't want someone else reading what the market is offering for you. In the beginning, you could probably do that to get your experience, but at some point, you're gonna have to do it yourself, because if you don't, there's gonna be some intuitive part that you're gonna miss out on. And that's what trading is. You are trying to grow and become the good trader, because that's all it is at the end of the day. If you are sleepy, you're tired, you're stressed, in any state you could be in, you're gonna have to perform, because that's what trading calls for you to do. One of the things we wanna look at is HOLO. Now, this was one of my favorite this week. It's not the one that profited the most, but it's one of my favorite. That's because it's a bounce short. Bounce short is one of the easiest shorts you can manage. And it has a really high win rate. So that's why I love it. If we look at the historic chart, we see a lot of volume. We're talking about individual days with individual resistances. Like here, you got 50 million, another one, 50 million. And then if you look a little bit closer to the current date, you see things at least 20 million. All these individual resistances, we can use them as a wall. And then we're gonna pretty much make a bet at each one of these walls. Even though some of them can be spread over a full dollar, we know that they're not gonna activate right away. But we could put our money where our mouth is and just go for it when it's hitting the wall or when it's approaching the wall. And that's why I love bounce short. Now, what happened this week is on the 14th, we had a run up. This run up started at $2 and it went up to $4.20 before the market even opened. Now, at that point, we know there's a resistance. So at the open, we saw this pullback from $4.20 all the way to $3.50. This is good because if we see a pullback before the open, this is already the first step inside of a topping pattern. If you add that on top of overhead resistance, we're talking historic resistance, that means it's the perfect bounce short. But we also have some other plays. One of those plays is EDBL. Now, with EDBL, this was kind of a gap up short. Now, I say kinda because when we look at this, it was a downtrending chart. The resistance on this had $6 range. With that, we understand that it's kind of spread thin and we're not really confident on spread thin resistances, but it's still usable, especially with the right amount of extension on the current day. And with this, it went up to 9 before we even opened the market. And then that little push at the market ended up being a stuff. We wanted to find some type of topping pattern. And with this, we had a pull in the pre-market and a push after the open to make a double top. We matched the pre-market high, and that stuffing action confirmed the downtrend. That's all we needed. Now we got $4 on a $9 stock, which means you could have made at least 45% on this stock. And if you held it throughout the day, you could have made more. Now, the last one we saw was a gap up short. It was the same day as HOLO. It's CTNT. Now with this one, it's not as pretty. It was a parabolic short. We're talking about this has a downtrending history and a little bit of consistent history. It's pretty much going sideways when you look at the daily chart. But we saw enough extension in one day that was not not sustainable. And once a topping pattern was put in, we rode that downtrend for as long as we could. Now, in this week in general, we've seen a lot of moves inside of the SPY. We're talking about the overall market went to 530. That's the highest in history so far. We made history today. But when we look at CTNT, it matched that history. In the morning, you could have made money, but it came all the way back because CTNT was matching the market strength. We're making new highs. We're still in the bull market that everyone's promoting. Now, it could be a meltdown, but who knows? If you want to be profitable in the long run, you're going to have to do it tired. You're going to have to do it broke. You're going to have to just do it. Do it! And the only way to stay consistent is to have a plan and just execute the plan every day. You know those type of people that are hard-headed and they have to learn their lessons the hard way? Well, that's most of traders. It really starts to become important when you put more money into the trading account. Or let's say your account grows into a large amount. The financial pressure is going to get to you. You're going to have to learn how to manage that account size before you go to the next account size. Don't try to predict the top and the bottom of the market. Instead, try to predict the volatility. Prediction is nice. You might predict right because it's only 50-50. It can either go up or it can go down. Well, if you're in a range-bound market or you're following a specific pattern, a lot of the time you will guess the right way. But what's more important is the long term. And you're usually going to lead with risk management. If you're doing a 1 to 2 risk management, we're talking about a 1 risk and a 2 upside. You can work with that, especially in a range-bound market. And the way you can work with that is knowing how to appropriately respond to each point of information at every point in time. So the best way to work with this is know how to appropriately react to every piece of information at every point in time. And all right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button. I'll see you in the next video. Peace.